and neuron links. We're specters of the streets. When daylight fades, we wake. I hear your voice within, and we've got everything. So turn the volume up. Welcome to a new domain. You drive me crazy to my core, compiling pure desire. Electric shivers on the inside, surging through the wires. You turn me on, break down the firewalls, and take me higher. It's like we'll never get enough.
All right. Good morning, everybody. Looks like we got ourselves a bit of a holiday turnout today. Good morning, Poog Lagoon. Good to have you on stream. Almost took the day off for the holiday. Maybe I should have. Looks like a lot of people are taking the day off, but it's all good. We'll go over the charts. We'll maybe keep a little bit shorter than usual. Markets are closed for MLK today, except crypto, of course. Good morning, D Koch. Good to have you here, buddy. Morning, Andrew. How you doing? Good morning, Marty. Always good to have you here for the crash out. I appreciate that. Yeah, quick little, couple of quick housekeeping items. Like the video, subscribe to the channel, all the things, and then check out the description. We got the free Magic Lines Discord in there where I'm giving my analysis on the markets every day, trying to build up a nice little trading and investment community there. So thank you to the 250 people who already joined after our launch this year. Love having you guys in there. What's up, Josh? What's up, Tom Nam? Oh, all right. So for anybody who's been living under a rock, we had ourselves another weekend dumperino. Tariffs are back on the menu, boys. Let's just jump right into things here with the Bitcoin chart, just to catch you guys up on where we were at last stream. Last week, I said I was expecting to see 80K from this purple zone and probably 74K. Thoughts on that have not really changed very much. To me, I'm still just viewing all of price action as trading within this November candle. We got the fair value gap here. We got the inside candle from December. Got some signs of reversal on the weekly chart. You can see on Bitcoin, we closed. It's a weekly sweep of this candle here that was containing our range. And on the 4-hour chart that came along with a bearish change in the state of delivery there. So pretty bearish on the weekly 4-hour time frame. The daily monthly, it is worth noting, has not confirmed yet. So the confirmation I'm looking for on the daily monthly time frame, this is for a bearish monthly sweep and reversal. That would be a close on the daily below 94.57. So although things are looking a little ugly on Bitcoin right now, I have definitely not ruled out the possibility of another move up this week. And that would be totally fine for the bearers. There's still big old supply zone here. So I wouldn't say short Bitcoin just yet. There's a few signals for the Bitcoin short. The first is going to be your daily closure here below 90.4 or so, or wherever this level is on your preferred chart. Other scenarios I'm looking for. Scenario one, we get a move back up, ideally to take out some of this internal range liquidity here, followed by a little market structure shift, enter, and then I'd be targeting all this liquidity down here around 80K. Also willing to have price maybe come back up higher, take out last week's high, do a similar sort of distribution up here, and then come back down. So scenario one, scenario two, scenario three. That's how I'm looking at Bitcoin at a high level. I'm already short Ethereum. We scaled into a little bit of a short last week. Unfortunately, took some of it off Friday afternoon because I didn't want to sit in it over the weekend, and we got the dump there. So that kind of sucks, but looking for an opportunity to get full size on this, depending on what Bitcoin ends up doing. I do think if Bitcoin puts in a new high, there's a good chance ETH just ends up putting in a lower high along with most of the other altcoin market. And then we see the dump after that. I'm looking for probably 2,300 or so on ETH. Be my ideal target. Basically, this would just be a little bit of a bear flag, and then we continue downward. Solana looks similarly bearish. I had doodled this out last time. We didn't quite get into that supply. It's possible we still go up here to 151. It's possible. But overall, I mean, this thing just continues to look mega cooked to me. If you own this, God help you. Would be fairly surprised if we don't tag 78 this year. I think there's a good chance for a bounce off of that level, but I'm still eyeballing single digits again on this. I think it's possible. So maybe we dump here, bounce, lower high, and then come down into all of this demand here, which is basically never been tagged. Could be an interesting zone. But yeah, this looks like a complete and utter trash at the moment. What's up, Bernie? What's up, Estence? Good to have you guys in here. Yeah, so crypto basically aids. The one exception is XMR and privacy coins in general. When I zoom out on XMR, it looks good. The market still likes privacy coins. I don't think this is some sort of flash in the pan exit pump, especially on something like XMR, which has some Bitcoin-like properties to it. Got a nice tag of the weekly fair value gap over the weekend and put in some nice constructive price action thus far. I would like us to maybe revisit this area. And I would like to look for some lower time frame entry model in there, ideally. And then I think a pretty safe target would be to all of this internal range liquidity here and this BPR up at 761 or so. So pretty sexy trade, I think, if we get it. And then there's always the possibility that this just kind of breaks out and keeps going. I was saying on X today, I'm getting a lot of hate for this, but I still think there's a decently high probability that Bitcoin has sort of generationally topped in terms of its cross asset class outperformance. And I still feel like people are too overweight Bitcoin and crypto in general, given this possibility. I think I've shown you guys the Bitcoin gold chart many times, the Bitcoin NASDAQ chart many times, and the Bitcoin USD chart also looks kind of cooked. So I don't know. I own less Bitcoin than I ever have. I don't want to be the guy who tells you to sell all your Bitcoin before it goes to 10 million. I don't want that on me. But I have been telling, friends and family who are sitting, 80, 90% of their net worth in Bitcoin still to maybe diversify. The future is a chaotic and unknowable place, and there's no reason for this thing to just keep going up simply because it has gone up in the past. It doesn't have to do that. It absolutely can do this. There's no reason why that can't happen. And I don't want people taking 80, 90% drawdown on their entire net worth for no reason, because that wouldn't be fun for anyone involved. It's pretty easy to see how this could take place. I mean, like the main sort of thing I keep pointing out to people is that the next president is probably not going to be a Republican at the rate things are going. And the blue team associates the orange coin with the red team at this point. And normally when you have a Democratic administration, it's not really that bearish for the stock market or industry in general, because most of the people in power, right, they're still sort of like corporatist Democrats. They still get elected on the basis of getting donations from corporate interests. The problem with Bitcoin is it doesn't really have any corporate interests, which you could argue is the good thing about it in the long run, and I would say is still a good thing. But I don't know that the crypto lobby in and of itself is going to be enough to to save the coin. There doesn't even have to be some like aggressive tailwinds. Just the removal, aggressive headwinds. Just the removal of all the tailwinds we've had could be enough. Again, we've had all the positive catalysts. We had the ETF. We had the crazy guy mortgaging his entire company to buy everything. We had the strategic reserve. I don't know what else there is at this point. So that's not great in my mind. I did notice this week or last week, actually, I don't know if you guys follow Capital Flows, by the way, on Substack. So shout out to Capital Flows. Great X account as well if you guys are on X. Really one of my favorite macro thinkers. And he published a really interesting piece last week titled "They Sold Everyone a Lie and Then Became the New Establishment." And it's a pretty interesting and thought-provoking, I think, piece on the current state of crypto and where we're going and how to make money in that world. And I really liked it because it tapped into some things that I've been thinking for a while, some things that maybe I haven't been able to properly put onto paper as well as he did. But the sort of 10,000 foot view of this, and I think it's a free piece, so I think you guys can go over to his Substack and read it if you want. But the kind of like core bullet points are that one, crypto lost its way and confused price with progress. The real utility became number go up technology and narrative adoption. And then in effect, we sort of recreated like legacy wealth dynamics where we have these like early insiders that extract value, and then we sell the later participants an ideology more so than we sell them like an opportunity. So kind of just some, I don't know, late stage capitalism stuff that we just speed ran there. And Bitcoin is not immune from this. Like Bitcoin, everybody likes to say is this special little snowflake, but I don't know. Like I would argue that Bitcoin is one of the worst and perhaps most insidious culprits of this because it's kind of cloaked itself in this robe of like, no, like it's illegitimate when all the other coins do this because all the other coins are fake, but Bitcoin is real and good. And the fact that the price goes up because people buy the coin and for no other reason is okay when we do it. And I think everybody believes that and will continue to believe that until the price just stops going up. Um, are we seeing that like literally right now? I don't know. I'm not going to be the guy who tries to call a top on the 20-year bull run in the middle of like, zoomed out crazy momentum. But like I see all the warning signs there. Like everybody just buys it because everybody else buys it. Nobody really understands it particularly well. There's no sort of inherent um, cash flows or anything putting a floor on the price. This is all the stuff that the crypto haters said to us for many, many, many years. And those of us who are in crypto, I think over time just learns to basically block them out. And then we're like, they're wrong because like, look at the price. It just kept going up for so long. Um, but they might not be wrong. They might just be early to that idea. And the thought of that makes me nervous. And when I think about the future and how unpredictable it is and how chaotic it is, and I look at how the market is currently reacting to present day chaos and what it's bidding and what it's not bidding, it makes me not want to hold this coin in any sort of overweight number in my portfolio. And so I have, months ago, kind of de-risked my crypto and got off overweight and over leveraged, which I think is definitely a good thing for people to do. Bitcoin in particular, in recent years, really pivoted towards chasing legitimacy instead of solving constraints. It basically said the fact that we don't do anything is a good thing, and it sort of like actively sought to harden that. And maybe that is still like a correct, very long run decision. I'm not smart enough to know that. But I do know that the other end of Bitcoin really, really embraced the ETFs and institutions and TradFi, and that sort of integration became the end goal. And we started just posting the ETF inflows, and we held up Saylor as some sort of god. And it really is, if you think about it, a bit of a bastardization reversal of the original thesis. And I don't know that this would be the fulfillment of that thesis. But getting back to the capital flows piece, and in terms of like, well, what should you buy? Like, what is anything bullish about crypto? And I thought like his key takeaway in this article was basically that the objective was never to bring crypto into TradFi. The objective is to bring TradFi into crypto. But the problem with this is like we can't really bring TradFi into Bitcoin just because of the nature of Bitcoin and how it operates, right? But the opportunity instead lies basically in the global financial infrastructure. So what he points out in this piece is that the largest and most important markets in the finance system are interest rates and FX, because they determine how nominal and real changes reverberate, throughout the economy. And to operate at scale within the system, financial institutions, corporations, they have to hedge their interest rates and FX exposure. And the conclusion of this is that like leverage is like a big, big, big thing here. And the ability for crypto to basically facilitate the settlement and leverage of these particular markets, which just dominate the global landscape, are the true unrealized opportunity. And the TLDR of all this, Stephen, what do I buy? The conclusion of capital flows is that you should buy hyperliquid. And I thought this was interesting. I am an owner and enjoyer of hype. Filled up some bags at $10 or so back in the spring. Had a nice little trade on that. Let me pull up the chart here. And, you know, way back in, I think, May, I said this thing is going to $25. It did not go there in a straight line. It went back up to $60 first from, 44. So I think where I first made that call. But it has since gone to 22, which is the mid-range of this very nice accumulation we have here. Let me change this. Boom. So I think in the long term, this chart looks pretty good to me. Is it going to go up from here? No, probably not. But you have like a very clear and a very massive range here. And you had a nice long acceptance outside this range. We expanded a pretty good distance from the range high. So I don't think the range low is in any danger here. And the two main points we want to look for to buy are, demand around the mid-range, which is right around like $21. There's a little zone here chilling right below the lows, which is nice. And then if that doesn't hold, you want to look towards the origin of the move, which is down here from $9 to $17 or so. And so when it comes to crypto now, like this is one of the main focuses I have, because I actually see a reason for this coin to go up from here and to have a multi-year and hopefully multi-decade run and to do some nice multiples, which is why we're all in the space right now. And if I pop open the quarterly chart and kind of simplify things a little bit. So your quarterly demand is your quarterly order block. And then we have this nice fat expansion candle here. And one of the setups I like to look for in my trading is to like identify these big, thick expansion candles that are moving towards an obvious area of demand, especially when the overall bias I have is for price to go back up. Because with these long expansion candles, you often get a setup where you have a little sweep of the low of the expansion candle back inside the range, and then boom, you get a very, very rapid reversal. You saw a little microcosm of that right here. This was during the spring pump. You had expansion to the upside, you got your pullback, and then you had this candle here, this quarterly candle. And then what did price do? Sweeps the low of that quarterly candle, and then boom, it just explodes to the upside. So I suspect we're going to do something similar here. And I don't know if that's just going to be a shallow sweep of this quarterly low into that like $20 region, or if we end up getting a bit of a deeper pullback into this weekly demand here around $17. But either way, I think it's going to be both like an incredible trade, because from just a trade perspective, depending on, how deep that wick goes and where you go in, like this could be a 6-to-1 trade back to the highs of the quarterly candle. You don't even have to take it to new all-time highs in price discovery. So an amazing trade. And then as an investment, I mean, it's pretty great as well. And whether you buy this thing at $21 or you buy it at $14, like if it goes to $200, do you really care? No, not really. So I'm going to be watching this like a hawk in the coming weeks, months, however long it takes for it to bottom. And I'm going to be looking to juice up the hype exposure. Other interesting thing about hype is that it has PER, which is basically the rebrand of the Sonnet Biotherapeuticals treasury company. So this is ticker PER on the NASDAQ. Not a whole lot going on here yet. I mean, sure, got a weekly sweep. Got another weekly sweep. Could look worse. I'm not saying to go all in and mortgage your house just yet, but it's interesting to me that this is accessible through TradFi capital means. Should be a nice way to get some money into the stock, and I think Capital Flows has done some analysis on the NAV and all those good metrics. I think this is trading at a 25% discount currently at current prices. So also worth noting, and also maybe an argument for buying PER instead of buying hype if you're bullish on the asset. But I didn't stop there. I thought it was interesting to play on this idea of what the future of crypto might look like. And I screwed around with ChatGPT for a while and kind of fed this thesis into ChatGPT and said, like, hey, what else in the crypto ecosystem meets these qualifications? Is there anything else we should be buying? And it turns out the answer to that is not very many things. I fed it some stuff directly that I have been kind of bullish on, like Aave, like Curve, and they don't quite neatly fit in to this thesis. But one coin came up that I thought was interesting, and it's a coin I've bought and traded in the past, and that was Pendle. Not sure you guys are familiar with Pendle. It's always been one of the more interesting DeFi projects to me since it came on the scene back in like 23 or 22 or whatever. It's basically sort of like a interest rate derivatives market. Effectively, you're sort of doing interest rate swaps on. I think the main market is stuff like the Ethereum yield, but there's no reason why this couldn't plug into the larger interest rate swaps infrastructure of TradFi, and that's just a market of exponentially more size. And this looked really interesting to me when I zoomed out to the yearly candles. Like this could actually be a very interesting 1, 2, 3 yearly candle setup, because you have your expansion candle. You get a close well above the mid-range here. So there's an implicit expectation that we go back here to 750. And then you get your retracement candle here. 2025. We leave a nice little bullish yearly fair value gap. So similar to the hype setup, if we get some sort of sweep here of the 2025 low, which currently sits at about $1.65, maybe we get a monthly sweep to go on with, along with that, maybe some bullish weekly market structure. This starts looking like a very, very, very interesting trade. And you can paint a rosy scenario where this is expansion and then just a giant multi-year accumulation, maybe a sweep of the accumulation range and then expansion outside the range. So very interesting there. Very interested in hype, very interested in Pendle. Obviously, I'm a little near-term bearish on the crypto markets, but trying to zoom out here and kind of always be thinking about and reassessing my long-term crypto thesis, which is always in flux because, quite frankly, the entire industry is a bit of a shit show, you know? So thought that was cool. Thought I would put that on your radar. Again, the other thing I talked about was XMR, Monero, privacy coins. Interesting spot for the Monero Bitcoin ratio, because this is basically your high time frame market structure. So we're at the point now where, are we going to break this high on the ratio? At which point we've shifted market structure on the highest of time frames, or are we going to reject here in this supply? I suspect this gives a little rejection, as it has been doing, and then comes back up and breaks structure. And I think Monero looks very interesting to trade. I think that if you own Bitcoin and you're able to get your hands on spot Monero, which is a little tricky to get your hands on, but it makes sense, I think, to hedge out your Bitcoin stash. Like, I feel like owning Bitcoin and not owning at least like 5% Monero is risky. It's very risky. Poog Lagoon asks, why doesn't ETH Sol fit the thesis of TradFi moving on chain? Couldn't the same be said for the rest of DeFi? It's a very good question. It's a very good question. By the way, if you guys have any questions or chart requests, drop them in the chat. I will get to them at the end of the stream. The question of why does an ETH Sol fit the thesis of TradFi moving on chain is largely a question of value capture. It is very, very, very easy to frame out a thesis of value capture for Hyperliquid and the HYPE token. From day one, the HYPE token has been capturing value, right? And Hyperliquid itself is both an application and an infrastructure layer, which is really, really good. And in crypto, we've had this open question for years now, like, what's going to capture the value? Is it going to be the infrastructure layer, or is it going to be the application layer? I am on team application layer, and tokens like Ethereum, like Solana, have this built-in problem whereby which the more they do to drive value capture to the token, the more it has a tendency to hurt the usability of the infrastructure layer itself. And then there becomes this question of like, how commoditized is that infrastructure layer? Like, how much more valuable is the block space on Solana really versus some other L1? And how much more valuable is it on ETH versus Solana in that bucket of L1s, you know, which would probably squarely not fall into the realm of like decentralized. But neither does ETH either, right? It's just sort of in this bucket of like maybe sufficiently decentralized. So that's a huge issue, along with the application layer issue. It's very easy to see a world where all of the TradFi institutions build on top of the L1 infrastructure, and they do so in a way that just mimics the way that we build applications on top of TCP/IP. And TCP/IP captured virtually no value in the realm of the internet, but it enabled the creation of many trillions of dollars of value, right? So that's the, I think, easier answer for the L1s. The question of why doesn't the rest of DeFi capture value, I think, is a little more nuanced. and difficult to answer. And I'm going to be honest with you guys. I don't know if I'm big brained enough to give that answer to you guys. But for something like Aave in particular versus, say, Hyperliquid, one of the interesting things about Hyperliquid is that it facilitates the derivatives market, right? And the interesting thing about the derivatives market is that derivatives are orders of magnitude larger as a market than like the underlying things that they represent, right? This is kind of one of the themes, I think, of like The Big Short, right? Where we created these financial assets that were sort of bets on underlying things, credit default swaps. And those derivative markets grew to be larger than the underlying markets themselves. I think Warren Buffett once called them weapons of financial mass destruction, right? So Aave, as it stands today, is sort of like inherently constrained by the liquidity within Aave itself. And its ability to tap into the traditional layer of finance is, on top of that, a little bit questionable, I think, for regulatory purposes and that sort of thing. Whereas Pendle is a derivatives market, and Hyperliquid is both like Pendle as well as an infrastructure layer, but they're both infrastructure layers and derivatives market. So like there's not really this ceiling on the value that Hyperliquid could capture in the same way that there is with Aave. And you see this in a lot of areas of DeFi. This was kind of heralded, I think, as one of the main features of DeFi. Like this is best exemplified in the realm of like over collateralized lending. And over collateralized lending is good because you can like formulaically have these like permissionless loans, and people can borrow and lend money, and we don't have to worry about like transparency. We don't have to worry about anybody getting paid back. It can be all done in this kind of rules-based way. But the problem with that is that's not how the traditional financial system operates. Like the vast, vast, vast majority of debt, I believe, is some form of like uncollateralized lending. That's like the real pie in the sky market. And we've struggled to replicate that in DeFi. We have some protocols that do it, but they're just basically slapping, some sort of TradFi corporate legal framework on top of some on-chain stuff, and it's not very elegant, and these markets haven't really caught fire yet. So same issue with something like Curve that you have with Aave, whereas like you have this like finite pool of capital that is within the Curve ecosystem that is limited by that capital that is basically like entirely crypto native capital. And the moat on that is pretty good, I think. I think like liquidity is definitely a moat, but there's still this sort of like immense, I think, race to the bottom in terms of fees there. That's problematic. Uniswap, also a similar idea. I think that the big distinction between Hyperliquid and Uniswap is the perp element, because that perp element that lends itself to derivatives, it lends itself to the market not being tied to on-chain capital directly and to being like potentially like exponentially greater than the underlying market. Like I don't think there's any world where Uniswap ETH liquidity exceeds the total market cap of ETH, for example. But there is a world where Ethereum derivatives on Hyperliquid exceed the market cap of ETH and Bitcoin and all that other stuff. So that's kind of my high level thoughts on that. Feel free to pick that apart or offer your objections. Like I said, I'm a trader. I read price action. I like to think I'm kind of smart, but like I don't feel that I have a tremendous edge in like assessing any of these narratives from a fundamental perspective. I just like when I encounter a good narrative. I think I have an ability to encounter a good narrative, and I like when that narrative is stacked on top of a chart that also looks good. It just gives me additional comfort and confluence in putting that trade on. Adrian asks, why Hyperliquid over Lighter, which has the Robinhood TradFi connection? I wouldn't say that I have a extraordinarily strong preference for Hyperliquid over Lighter. I haven't looked incredibly deeply into Lighter, and it's probably something I should do because it would, I would say that it does fall into this thesis, right? The other reason that this thesis is good is because not only does it fit into the realm of TradFi capital, but it fits very squarely into the realm of what actually works in crypto today, what actually generates usage in crypto today, what actually generates fees and token value capture in crypto today. So there's a nice kind of back and forth there. But I'm gonna look over Lighter a little deeper, and then I'll let you guys know my my thoughts on that one. But that's just kind of my high level at the moment. Okay, we're gonna pull this now back into TradFi land. We do our checkup on metals. Gold was looking a little sus last week for a short period of time, but it has undoubtedly had a very, very strong reaction to the news over the weekend. I was hoping for a pullback into the zone in this kind of 4,400 area. I'm not sure it's going to give that in the short run anymore. This now looks like a pretty clean breakout and then range high retest, confluent with this fair value gap here. So I think we're starting a new expansion leg up. And I think if you're a trader, you can probably form an entry around this low. I don't think gold is breaking a new lows if we lose this low or anything, and it may still be a good kind of like value investment in this region here. But from a trade perspective, that looks like an interesting invalidation now, and we've left a bit of a weekly opening gap here. So definitely a possibility price expands a little bit and then comes back down and takes some of this, maybe fills that gap. And down here, if you get some sort of entry model, that's going to look pretty interesting for a trade and possibly like a big breakout runner trade. Like if this is just gold saying, fuck it, the world is going to hell, we're going up, baby. Gold looking very, very strong. Silver looking even better than gold, I would say. Similar breakout potential. I would still like to see a similar thing on silver here where we move away from this zone and then maybe have some liquidity grab. That would be my preference, similar to what you saw like here. We get the zone, we move away, and then we have a pullback, run some internal liquidity, but just taps into this larger zone, and then we go up. This is something you want to look at a lot when you're trading, but you can do this when you're investing too, right? If you identify like a higher time frame consolidation, ideally one that runs some liquidity and then price closes and moves away from it, and you get some acceptance outside that area, you want to look for some sort of buildup of lower time frame liquidity, higher lows, higher highs. People place stop losses below these levels. And then when you get a sharp sell-off, price sometimes goes, it takes out that and then resumes the uptrend because it's tapping into that larger area there, especially when that corresponds with like a touch of the mid-range of those areas. That could be pretty powerful for buying if you're trying to get into higher time frame positions. So silver looks really, really good. Gold looks really, really good. All the metals look really good. I mean, platinum, I believe, is similarly well positioned on the high time frame. Platinum is really interesting because platinum just broke out of a more than decade-long consolidation. We had an initial test of the level and rejection here in December. But now, perhaps pushing through this, I don't see conclusive evidence of a breakout just yet on the weekly. When I see a breakout, what I want to see is something like a fair value gap like this through the level. I don't like to see price push up into the level and like reject a few times with no gap in here. That's often a sign we're going to go back lower. But in this case, that could just be like a touch of around like 2K. So we might kind of look to just take some of this liquidity here, pull back, and then go. So platinum, if we get a pullback into the kind of low 2K region and you start getting some sort of setup here, daily sweep, weekly sweep, something high time frame, and some bullish lower time frame market structure, that starts being a really interesting trade because you can start maybe framing a trade with an invalidation below that zone. And then that could end up being the breakout trade. And then you could have like a multi-bagger there. So I'm setting alerts on platinum around 2176, going to monitor it. So either looking to position in the low 2Ks or look for some more definitive breakout with a fair value gap, consolidation, and then look to maybe position on a run of the consolidation into the gap. But overall, looks really, really good. Copper looks pretty solid as well, if I recall. So similar, yeah, very similar idea on copper here. You've got this crazy high time frame zone. And you have a fairly like non-definitive break of this. So again, would prefer to see a definitive push up with a gap, consolidate into the gap, go. Or I would like to see some sort of, maybe we sweep, we come back down, run some of this liquidity, and then look for a setup deeper in the zone. I don't know if it'll pull back that much, but something here in like the $520-ish region would be interesting because this is a decent consolidation around the mid-range of that area that we haven't really tapped back into yet. It'd be quite the somewhat nasty sell-off, but I think would provide a pretty freaking good long-term buying opportunity because especially when you zoom out on this and you just look at the higher time frame candles, looks pretty good. There's your market structure. So that pullback could just be the higher low within this larger trend, and then we go. Yeah, weird times. I know most of you aren't used to investing in trading commodities. You're used to the magic internet money, but the commodities just look so much better. Very, very strong markets, strong trending markets. If you're trading, you want to be trading the markets that are trending. If you're investing, you also want to be trading the markets or investing in the markets that are trending. Your trends are just measured in like much higher time frames than you might be looking at if you're trading, you know? So that's the commodities big picture. Equities, I said last week, are looking a little, I described them as sus, I believe. All right, Jordan, you asked a quick question. You want to go? I'll answer your question real quick. You're talking about the copper chart I drew. Why isn't that big bearish expansion candle with the big top wick a higher low? It is. I just drew it lazily. Thank you for pointing that out. So yeah, that would end up being what this looks like. You're so welcome. All right, back to stonks. Stonks. So stonks are weird right now because you've got a pretty marked divergence between the NASDAQ, the S&P 500, and the Dow Jones, right? So let me see if I can pull up weekly charts on all of these here so that you can see what we've got going on. So there's the S&P, there's the NASDAQ, there's the Dow Jones. Now you can see right away the Dow Jones looks stronger than the S&P. Bit of a more forceful push up above the highs. S&P still took the all-time high. The NASDAQ, as you can see, much weaker, right? So have not put in a new high here. Now, when this happens, we sometimes call it in the ICT smart money concept trading world an SMT. We monitor assets that are correlated and tend to trade together. And when one asset that should be putting in a higher high with a different asset or a lower low with a different asset fails to do so, it can often be an indicator of some bearish momentum in the market, and definitely an indicator that you want to be trading the weaker asset. So I think if you want to be hedging stocks here, you don't want to be hedging with the Dow Jones because it's strong. It's trading above all-time high. S&P is trading below all-time high, but still closed above all-time high. And then you have the NASDAQ here, which both is trading below all-time high and is not closed above all-time high. So the NASDAQ looks pretty weak to me just on the basis of this sort of like cross-asset analysis here. And if we go back to just the single time frame and I get off the weekly and get a little more granular, this is obviously a consolidation right now. We're just kind of moving sideways. Price isn't doing anything. I have wondered if we put in a structural lower low here back in November, and now this is basically a lower high that we're putting in, and then price is going to move down to take the November low, perhaps trading into this order block here from the summer around 24K. And possibly if we get like a tariff tantrum 2.0, revisiting the range highs at 23.3, or in a particularly nasty scenario, starting to look towards the mid-range, possibly some sort of untapped demand, right? This would be a pretty nasty pullback if that were to happen, 20%. Look, 20% pullbacks happen in the stock market. We had one last year. This was about 26% from high to low. So I am bullish on equities in the big picture, but I am open to the idea that we may have a bit of a nasty drawdown. And I'm excited for it because I think that would provide a really, really good buying opportunity if it were to come. I don't think this is just dumping to zero like a shitcoin or anything like that. But we've gone up only for many, many months and basically put like no market structure in along the way. There's not been any real significant pullbacks other than right here. So I think if we lose that 23 level, get back inside this range, that definitely opens up the downside move sub 20K. But are we there yet? No. In the short term, I am expecting us to go to 24.8 as sort of like an intermediate term target. And the area of interest to me to potentially get into like an actual swing short would ideally be if we sweep out this low and then come up here towards 26.2 and then do some sort of market structure break, put in another lower high versus S&P 500 and the NASDAQ. That would be interesting to me. Right now, you have to understand price is just chilling at the mid-range of a big consolidation. So taking swing positions from here is like you're gonna get chopped. You want to be looking at the range extremes, which is up here. This is the extreme untapped demand. You can see a little fair value gap there, maybe. That's what this order block gave us. So price hasn't come back there yet. It tends to like to go back to those areas. That's one extreme. And then the other extreme would be, 24.4. But more likely, I think if we go towards range lows, we actually do take the range low. And then we start looking at this demand below the range low around 24K for a bottom. So interested in longing here if the setup looks good. I don't want to be longing into a mega dump, but we could definitely just come back down here, sweep this, get back inside, and then go for the highs. Otherwise, we maybe accept outside this range and then continue the dump. So it's my general vibe on the index right now. There's a couple names I've been watching. I've been talking about NVIDIA for a while, monitoring it for some bearishness, still observing the news candle opening gap from November, which prices traded back towards. This is the big earnings call. Until price accepts back above this zone, at which point I think we're probably good for new highs. I'm just biasly I'm bearish to the downside on this. Similar deal here where like if this is like a distribution range right here, which I could definitely make a case it is. And for all you pattern traders, you're going to end up with like some sort of head and shoulder on head and shoulder thing, maybe. You can see there's nothing below us. There's nothing here. There's like no structure here. So if we consolidate for a while and then break down from that consolidation, our eyes have to immediately be going back towards prior high time frame demand, which is basically this like multi-year area here. The mid-range of which is way down at 120. The range high is always an interesting area to look for a reversal, 150. And then we've got some demand that looks juicy within this at 104. And before you say there's no way we can go that low, that looks so far down, while I concede that moves like this are not highly probable, they do happen. And if I were to throw on maybe a moving average onto this, just throw like a moving average ribbon here. So there's your 50, 100, 200. The 200-day is way down here at 163. If we go to the weekly, Charlie Munger used to always say that you make a lot of money sitting on your hands and then buying stocks at the 200-week moving average. The 200-week moving average for NVIDIA is currently sitting down here at $84. And you could see a scenario where like if this plays out, for some reason we have some sort of protracted bear market and this average keeps moving up, like you can see a world where this breaks down and then ends up tagging that moving average later this year. At which case, like, holy God, would this be like an incredible opportunity, right? Like, you get the 200 and this demand, like around like $100, like, wow, that'd be lovely. People usually don't have the cash to buy here because they miss the pump and then they FOMO in here and then they get chopped up and then it pumps, it dumps, and then they start losing everything and then they got nothing to buy here and they've kind of given up. But I think this is something that could happen. I really do. I really do. Let's see, what else were we watching? We took a short in the Discord on Palantir this week. Similar sort of setup. Palantir is basically like a very clean fractal model short. So you have an expansion candle and then you get a very clean sweep of the high closure back inside the expansion candle. And then if we drop to the weekly chart, you can see there's a bearish market structure shift right there along with that. I believe this is just the retest lower high and that this is going to roll over. And then your target would be the low of that candle. So that would be about 128. But realistically speaking, there's a bunch of little trend line liquidity built up here. There's no real market structure or demand until you get down here. This is the $125 to $64 region. And then within this demand, there's kind of like a smaller zone here around like 98 bucks. This seems very probable to me. If we're going to have like a market-wide sell-off, I think Palantir is like a great candidate for a short. It is extraordinarily richly valued. I think it has like one of, if not the highest, like earning multiples on the whole NASDAQ. So in a portfolio I have that's like largely long, it makes sense to me to start picking out some targeted shorts. I've been sharing those in the Discord, and especially in the premium Discord, just to kind of balance out some of the risk of the portfolio. So this looks heavy. It looks heavy. We'll see where things head in coming weeks. Worth noting last week that we did have a breakout of this inside candle here with the weekly close at 171. So I'm hoping, for the sake of my short bags, that this just expands down at this point. But we'll see where we go. Also been watching Tesla like a hawk. I love Tesla. I think it's a great company. I want to buy so much of this stock. I was hoping that this was just a little initial tag of the range high, and then we would not sell off so hard and go back to all-time highs. This is a pretty severe sell-off at this point. We've got multiple weekly expansion candles leaving behind large gaps. Not super bullish. Doesn't mean we can't go back to all-time highs from here, but the risk reward, in my opinion, is not great. Once we start losing 125, I think this probably accelerates downward. If I try to pull up some higher time frame candles and see what targets might look like with this sweep here. The 12-month looks okay. The 3-month, yeah. So on the 3-month chart, there's a pretty clean fair value gap here, and then a quarterly low at 383. So I do think a move to 383 from here is pretty highly probable. That'd be a 12% pullback. That's nothing for Tesla. So that's definitely in the cards. And then if things get a little bit spicy, there is some major kind of like trend line liquidity built up here in the low 300s. And some pretty clean demand, I think, sitting below that. So I think my worst case scenario is probably 260. Should be a 40% down from here. I would be very excited if we get $260 Tesla. I will be buying a lot of Tesla. I will be levering my account up in all likelihood to do that. And I will feel pretty good about doing that because I do think this is a $1,000 stock, but the price action is the price action at the moment. I'm hopeful we just tag maybe like 356 looks like a pretty clean level. Where's the mid-range here? Yeah, so 356 gives you the quarterly low, the fair value gap. It gives you this very juicy order block here that hasn't been touched. It's the mid-range of the higher time frame zone. So that would be the first spot I would be looking to find some sort of tradable bottom. But as always, we'll see what price does when it gets there. All right, I'm gonna go over the chat now, see if we get any questions in here. JD, thoughts on AI agents in relation to crypto prices? I don't know. What do you mean? Like, is there something I can buy? I think that there's a world where AI crypto ends up being a good narrative. I've been watching and continue to watch like virtual as like maybe an expression of that narrative. I haven't seen anything super good on the virtual chart lately, but that's kind of in on my watch list for stuff to acquire for sure. The buoy to BlackRock, etc., talking about tokenizing all assets. What do you think about them doing that on a public blockchain versus one they control? And if it's one they control, does that leave any future for ETH? Yeah, I honestly like kind of struggle to see the world where they want to do it in some fashion where they don't have a degree of control. I don't know how much they're going to pay to Ethereum to do so. And even if they do build on Ethereum, I still feel like a lot of the value capture will end up being, within that BlackRock app. So it's a bit of a risk. I do think Ethereum, there is a world where Ethereum does really, really well. I don't like Ethereum at $3,200. Like I really want to buy it below 800, 700 bucks. Like ideally like in the 400s. I think it starts looking really, really, really attractive for the long term. This idea of, are we going to build everything on and tokenize everything on Ethereum in such a way where like we have all this like collateral that can make its way into permissionless DeFi? I think it's tricky because it's hard for me right now as things stand to see how we're going to tokenize that collateral in a way where it's like really decentralized. Like if we end up putting tokenized mortgage-backed securities or something on the blockchain, like Circle, the biggest stable coin other than Tether, or in Tether itself, like Circle is like centralized to a degree. I guess the bull case would be that hasn't stopped Circle from becoming like a large component of DeFi, but I also think that the barrier for doing that with like buckets of assets like securities and stuff like that is way higher. So I would worry about this world where we put a bunch of stuff on chain, but it's done in these sort of like walled gardened ecosystems, and then maybe the banks build their own sort of like layer to kind of communicate and to transfer collateral between those ecosystems, and maybe that bypasses Ethereum in some way, shape, or form, or does so in a way where there's like not value accrued to Ethereum. I know as far as like my own person goes, right? Like I personally care more about the usability and the kind of interoperability of my assets, like with the rest of my net worth and everything, than I care about like how decentralized exactly is this like specific collateral. And I think the market has felt the same way in certain ways. And I think we'll feel the same way in the future, in the same way that people generally just don't give a shit about privacy. So I think all of that is definitely a risk factor to the Ethereum value capture. Poog JD, the idea of AI agents using crypto for payments. Yeah. So when I talk about AI agents and crypto, I think that's a really interesting thesis. I think there's a few projects that you could see fitting into that thesis, like Hashgraph, like Nano, like Virtual. There's probably a bunch of stuff that's in that bucket. It's a super interesting bucket. It's one of those theses that like I could actually see generating like enormous returns at one point. I don't see it in the charts right now, but it's I think it's one of those things we have to keep an eye on, because it could be a thing. And the asymmetry is just so large, like especially some of these projects dump really hard. Like if Bitcoin has like a significant pullback, like the asymmetry would be so wild, maybe that it's worth keeping an eye on them. So if you guys ever have any that you want to add to my watch list or have me look at, yeah, definitely let me know what you're looking at. Looks like Jordan's dropped a bunch of tickers here in the tab. Who are the Seawolf guys? Says the Seawolf guys like these tickers. LYB. Lyondell Based Industries. Immediate thing that jumps out to me on the yearly chart here is we have this kind of unswept low on the yearly candle. I feel like even if price goes all the way up to $70, $80 close to that, I feel like it's still going to want to come back to this range low. There's no sweep on the quarterly chart. The monthly looks a little more constructive. Like you would at least, if we close the month here, you'd at least have some kind of monthly reversal. But this is one of those setups that I would prefer to wait and see if it's going to come back down and maybe form a double bottom in this zone, but like more ideally like sweep out this range low and then put in something. When I look at the high time frame chart, that's the bias that I see. And then when I look at some sort of like lower time frame areas, price is going to want to go to 53, 54 and mitigate this mid range. So waiting for that to happen and seeing if there's like a rejection and then a higher low, or a rejection and then a sweep, or if price just starts disrespecting this and pushing up higher, all of those things will give you more information on this from a trading perspective. From an investing perspective, like I would still prefer to see the range low taken here. Seawolf is a fund run by Porter and Vinny from Steve Carell's hedge fund in The Big Short. Cool. What does LYB do, ChatGPT? One of the largest plastics, chemicals, and refining companies in the world. So interesting. Kind of bullish oil. I don't know if that makes me bullish plastics. I don't know if oil up is bullish for a plastics company. Outside my pay grade, but yeah, that's what I think of that chart. What else we got here? You want to look at TGT. What's TGT? Target. So I've had Target on my radar actually. So Target is interesting because Target is in the Citrini bullshit jobs bucket. So Citrini's got this basket of stocks that he thinks are going to be turbo bullish because even though we don't know what AI is going to do in the future as far as capabilities, we know that it is good enough to replace a lot of mid employees and some corporations with a high percentage of mid employee workforce could see major productivity gains as a result. I think Target also got caught up in some of the Anheuser-Busch woke sell-off shit, and I don't know. So stock's taking a beating. Same thing with the 12-month candle. I would prefer that this be swept in this instance. Like it doesn't have to be. It did tap into something. There's a sweep on the quarterly, which is pretty nice. This is definitely a kind of first trouble area right now. We've got a bearish fair value gap here. So curious to see what price ends up doing there. What we got on the daily. Mm. Yeah, I wish I was paying attention to this. There was actually a kind of hard to see this on stream, but on this on our fractal indicator, you had an entry signal right here because daily order block close above into the monthly level, and then price just takes off. But your target would have been right here, and we hit that on that trade. So yeah, it looks really good high time frame. I would probably wait for the January monthly candle close to do anything. If we end up closing with a big expansion candle like this, my general playbook would be to look for a pullback above the mid range of the expansion candle, wait for a daily setup, and then take the long. Otherwise, if that doesn't hold, you might be looking at a deeper retrace back into the zone. And then if you get a setup back in kind of like the 90 region, that would be bullish. So looks pretty interesting, but difficult to enter right here, I would say. But I like it. Lululemon. So Lululemon, again, we've got kind of a dangling yearly low here, this yearly expansion candle. We've got the same thing on the quarterly candle. So same thing here. I got a couple lows straggling there that I feel like are going to be used as a downside target. So something like Lulu, you know, the way I approach these is to wait for this low to get taken and to see if I get some sort of sweep setup. The lowest one would be some sort of daily setup on the confirmation of a monthly sweep. Although I guess if you're pretty aggressive, you can maybe do a 4-hour setup on the confirmation of a weekly sweep. That would be pretty interesting because then you'd have this range here and you could have a pretty nice trade, maybe up to, you know, the mid range and this order block, which is going to be a bit of a trouble area. But then all the way up to range highs ultimately. So those are like 3.5 to 1 and 7 to 1 trades respectively. So I like it. The only other way I could frame a trade right now is like if you wanted to say this is a breaker and to look for a setup in the breaker, but like I don't see an obvious kind of liquidity grab down here. Like if I'm going to take the breaker setup, I like to see that the breaker and the move it caused took some like really obvious like low or point of interest, and that price is not going to want to come back down. Whereas in this case, like I think you can make an argument that price comes back down for the low. So I would be putting this in the wait and see category for myself personally. Adobe. Another fairly horrendous looking 12-month chart. That doesn't look great. No signs of reversal here. I mean, this low looks like it's a target. A nice flat quarterly candle there. I would wait for 274 to get taken, maybe for 255 to get taken. Not a whole lot here to frame a trade off of. I guess you have your very high time frame mid-range. You could just go for your turbo high time frame OTE. Where's the 0.618? So yeah, like a liquidity grab, a major liquidity grab, yearly levels here in the golden pocket, the 618, be potentially interesting for an entry. At first glance, this is definitely not something I would want to trade. And because I wouldn't want to trade it, and because it's a 3-month chart, I also wouldn't want to invest in it because like my investment decisions are heavily influenced by what the charts look like, and I don't love this one. I don't love this one. You've also got SRUUF. Sprott Physical Uranium Trust. Well, I'm sure I'm going to like this one. Yeah. I knew I was going to like it. Yeah, I mean, high time frame, very high time frame. This looks like a very clean order block, expansion, retest, and now we're going back for new highs and hopefully a breakout. So the very high time frame is very bullishly biased on this. So as an investor, you're just basically just buying pullbacks. Oh boy, that was a thick candle last week. This would be an interesting area to look for a pullback. So you've got some kind of internal range liquidity here, a lot of range liquidity. And then you've got this bearish zone here, which you can see we're respecting the 50 of currently. So I like to anticipate pullbacks from these areas back into demand somewhere, and then I look for the higher low. So I'd be looking for a higher low somewhere between 20 and $18 or so, and then looking to take that to all-time highs. That's my opinion on that one. So I'll set an alert on that one. See what price does when we get down there. Thank you. It's an interesting chart. Love getting ideas from you guys. I actually get a lot of ideas from you guys. It's hard to screen all of the stocks out there, you know. Lunar, Intuitive Machines. Okay, looks pretty interesting at first glance. This is an aerospace company, right? Yeah, Lunar is an American aerospace tech company focused primarily on lunar and broader space infrastructure and services. Well, you know, we like the space stocks right now. We like the space stocks. I'm kind of hoping to, I'm not very long the space stocks right now. I'm kind of hoping to get a broader market pullback and hoping that some of these companies sell off pretty hard if the market dumps, because there is some bubble capital in them at the moment. Yeah, kind of I mean, it looks good. It's kind of a hard spot right now at like range highs. You know, I don't love buying stuff at range highs. If I'm really bullish on it, you know, I want to be looking for some sort of pullback and then to buy that pullback, or looking for like a definitive breakout and some sort of retrace consolidation, ideally above a gap, and then enter in that. Those are my preferred methods of getting into this stuff. If you wanted to be like kind of micro on it and take like multiple shots, like the nearest thing I see is like a weekly sweep here. So you'd be betting on basically this expansion just going through the highs, which it might not do, but at least the weekly sweep would give you some way to frame something. So my area of interest would be this order block that made the sweep. And if the market is so kind enough to give it to you, like if you get some pullback in here and you run this liquidity and then you get a setup, right? Then you can take the trade out of there and then frame the stop there. And then if you're aggressive, I guess you could take it through these highs. Although, like as a trader, you know, I'm wanting to TP this liquidity because it can give a big pullback. But that's how I would think about getting into this one. Very tricky to just market buy it here, especially after we just took this $22 liquidity right here. Be kind of asking to potentially eat an instantaneous like 15% drawdown, which I don't love doing. I don't know if there's like a broader market sell-off. You would hope to be able to get in like this demand would look really, really juicy down here at like $12. Be a hell of a sell-off and 40%. But we were just here 1 month ago, so hell of a move. I'm guessing the Guessing the RSI is going to look pretty spicy. Yeah, I mean, you get some bearish divergences on the high time frame, and there's some developing on the lower time frame. So, yeah, I don't know. Of course, this thing could just keep going up, but I wouldn't say it's like a high probability entry from here. I would say it looks pretty bullish, but you know, with a 40% risk of drawdown if you enter here. So maybe if you want to buy some and then buy all the way down, it's cool, you know. All right, let's see if we got anything else, guys, and then probably look to wrap it up soon. It's a pretty solid little stream. Obviously, it was not short. It never is. All right. Yeah, I think we got everybody's questions. So I'm going to wrap it there. Hopefully, you guys get some good ideas from the stream. I'm going to keep monitoring the lower time frame crypto price action. Like I said, it's a bit of a weird time. You had an illiquid dump on a Sunday night. The market's closed today, so what is this thing gonna do? Who the frig knows? I would be surprised if it just dumps without giving any of the New York people some sort of entry. You know, the whales like to fill their bags one way or another, and they were not around to catch this move. So some sort of retrace at a minimum seems likely in crypto. And like I said, there are scenarios I think where Bitcoin can actually just put in a higher low here, as terrible as this looks, and then maybe sell off, or not, and make me look like a moron. But definitely don't see the short setup exactly just yet, unless you're kind of averaging into it on the very high time frame with a wide stop. So yeah, join the Discord if you guys want the updates. Again, we got the link in the description below. Subscribe, turn on the notification bell, follow me on X, do all the things. Thank you guys for joining me. Always love having you here. Thank you for the stock tips. I'll see you guys same time, same place next week. May the lines be with you.